Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody guys, today we actually have to take a look at the euro currency because we stand at the European Central Bank meeting, and I just can't ignore this event because it's really a very important event and markets were waiting for that approximately a couple of weeks already. So I was preparing and discussing what's really could happen on this meeting. So speaking on the meeting directly, there's two major issues that will impact on the euro currency today. The first issue is the degree of the reducing of the quantitative easing program by the European Central Bank. So just to remind you, currently European Central Bank buying 60 billions of the bonds from the market each month, and currently they're discussing among the investors at what degree this program will be reduced. So in general, the common opinion right now is that should be somewhere about 20 billion. So the European Central Bank should reduce the program to 40 billions. Bank of America and Merrill Lynch think that it will be 30 billions. So the higher degree the program will be reduced, the more support the euro will get. So keep in mind the level of the 40, but if European Central Bank will reduce it more, it could be treated as the more hawkish sign from the European Central Bank. Second issue is how long this program still will hold. So as you know, it should be finished initially by the end of this year, but right now we are standing at the eve of the prolongation of this program, and depending on how long it will be kept, it will be also will impact on the euro. So currently it seems that it will be at least till the autumn of the 2018, but if it will be given a hint that probably it could be closed earlier, somewhere in the summer, it also could be supportive for the euro currency, because as long as European Central Bank will keep this program, as long as it will stay aside from the rate increasing, and that will be a bit dovish for European currency. Currently, at the same time, guys, we should not expect something really outstanding, because inflation in European area stands approximately around 1.5%. So this is lower than the beacon for European Union, around 2%. That's why currently, in the current circumstances, expect that European Central Bank will announce some unprecedented hawkish signs. It's also not quite correct. That's why if even we will hear that program will be reduced a bit greater than 20 billions, will be already bullish sign, and maybe Draghi will say something about the terms of this program. So returning back to the technical picture, guys, as you can see here, our suggestions and our suspicions on the not quite rational behavior of the market in recent couple of weeks was not in vain. So indeed, initially when we saw this bounce up here, it already was not quite normal, and we said that's not quite typical situation for forming on the hand and shoulders. It could mean that market is not formed yet, hasn't formed yet the top of the shoulder. Maybe some another leg up could follow, and that was really moment that we were worrying about. And indeed, as you can see, yesterday's session and in general during the sessions of this week, your currency shows that our suspicious was not in vain. So this was some reasons for that. Recently, as we have talked about it, we've got this bullish grabber here, and this pattern suggested taking out of this stop. As a result, guys, currently we could get, if indeed some hawkish notes will be from the European Central Bank, we could get this ABCD pattern up right to 1930 fib level. This will be agreement with the ABCD action. But even action to this point will not erase the hand shoulders construction. Why? Because it's critical that 1930 stands relatively very close to the top of the left shoulder, and this will keep harmony of this pattern. Besides, if market will get there, we will get in the slope of the head regardless triple to sell. Let's take a look. This will be drop down, ABCD retracement, if even action will be slightly higher. Finally, guys, we also have the potential bearish double repo sell on the weekly chart. And even if market will move above this top and will then return it back down, this will not mean immediately the failure of the bearish top. So we need to, in this case, we will need to get clear signs of failure of the weekly potential pattern. If market indeed will start climbing higher and higher above 121, in this case, yes. But while market is flirting around 121 area and below, multiple patterns could be formed, and all of them will not break yet the bearish stop that we have. But the first level that we will be watching for as a result of this session will be 1930. So if you have the bearish view and you're searching chance to go short in euro currency, I think that, as we said, you should wait either the breakout of this or the neckline, as we have talked about it a couple of days ago, or wait the completion of the bullish setup that we have right now. Because trying to anticipating of the dovish comments from the Fed and trying to take bearish position right now is very dangerous. So we need to get some patterns on your back, and this first pattern that you could get is regardless triple to sell around the resistance. So in this case, if you are taking short here, for example, if market will starting to form something here on the intraday chart, some bearish patterns, some minor reaction probably will follow as a result on the respect of this level. That will let you to move your stop to break even. So that's just ordinary tactics that we usually use on the trading on the markets. That's stuff for the bearish. If you have the bullish view, guys, well, here are some more chances for you. So on the 4-hour time frame chart, we have got this triple to buy that we have discussed is forming here. Market is also forming this bullish divergence. But major picture we have on the hourly chart. On the hourly chart, market is forming some kind of the sideways consolidation or large flag pattern, something of that sort. Also, we have here the divergence that we also already have talked about previously, right here. And right now, market stands at the intermediate target. So actually, guys, here is 161 extension of this A, B, C bottom, D pattern. So here's market has taken some pause. That's why if any retracement will follow, you could watch for two levels, probably 118.05, this first fib level, and confidence 117.85, 117.93. It also includes the weekly pivot point. So if any retracement will happen here. As a result, guys, if our bullish setup will be valid and if it will be if it will survive after the European Central Bank meeting, we could get the butterfly here, because the 127 extension of this, 161 extension of this stands very close to 1930. So shape of this pattern could be different, but any shape will be based on this swing. So maybe we already have, as you can see, this could become left wing, right? This could become this could become right wing. Or if market will show this meaningful retracement within a few hours, in this case, that could become the left wing, and that could become the right wing. But whatever shape will be, anyway, it will be based on this wing, and that's why the targets of these patterns will be the same. So that being said, for bears, if you would like to take the short position, wait for the European Central Bank meeting, wait with the completion of this bullish setup. Do not try to anticipate it, because it could be really expensive. If you have the bullish view, you could watch for these two levels. Hardly market will show the deeper retracement. But you should know and should take into consideration that you will need to dive in the turmoil of the European Central Bank meeting and take all the risks that could follow as a result of this meeting if you would like to take the position right before it. But overall technical setup right now looks mostly in favor of upward continuation because we have clear bullish patterns, we have the grabber here, and in general price action here, guys, was not quite logic for, because in take a look, the market hasn't quite reached the AB equals CD target. It has turned up too early. That's why, if you remember, our suggestion was that market should show some minor leg down here, but this hasn't happened. That is tells that some hidden forces support market here and pressing and pushing higher. Finally, take a look at this one action. So market has shown clear some kind of rejection, first reversal here, but it was erased very fast. This also suggests some existence of the purchase on the euro currency right now, and that also gives more confidence for possible upward continuation today.